few options for your intro. Choose the one that best fits your style. Option 1, friendly and direct. Hey everyone, and welcome back to Forex Scope. Today, we're diving deep into the AUD/NZD chart, specifically looking at the 15-minute and 1-minute timeframes for some quick insights. If you're new here, don't forget to hit that subscribe button so you don't miss out on our daily analysis and trading signals. Let's get started. Option 2, slightly more energetic. What's up, Forex traders, and welcome to Forex Scope. I'm excited to bring you a fresh analysis today on the AUD/NZD. We'll be dissecting the 15-minute and 1-minute charts to spot those potential opportunities. If you want to stay ahead of the market, make sure you subscribe to Forex Scope right now. Let's see what the charts are telling us. Option 3, concise and focused. Hello and welcome to Forex Scope. In this video, we're focusing on the AUD/NZD, examining both the 15-minute and 1-minute timeframes for upcoming price movements and potential trading signals. If you're serious about your Forex journey, hit that subscribe button. Let's jump right into the analysis. Option 4, question-based engagement. Hey traders, and welcome back to Forex Scope. Are you curious about the next move for the AUD/NZD? Today, we're breaking down the 15-minute and 1-minute charts to give you a clearer picture. Before we dive in, if you haven't already, please subscribe to Forex Scope to get our latest Forex insights and signals. Let's get analyzing. This support zone is identified by a period of consolidation and indecision in the price action. Between the timestamps 176-292-6300 and 176-292-7200, the price exhibited a defined range with the high price reaching 1.1549 and the low price touching 1.15459. This area shows multiple instances where the price tested the lower boundary and bounced back, indicating buyer interest at these levels. Specifically, the candle at 176-292-6300 had a significant downward wick, failing to break below this established support, and the subsequent candle at 176-292-7200 also showed resilience around this price area, suggesting a potential area where buying pressure overcomes selling pressure. The consistent interaction with this range implies accumulation or a pause in a downward move, making it a significant zone for potential price reversals or at least a temporary halt in bearish momentum. The price action here demonstrates a clear horizontal movement which suggests buyers stepped in to absorb selling pressure, creating a floor for the AUDNZD pair during this period, and it's located below the 1.15938 threshold as requested, offering a solid basis for a support level. The candlestick patterns within this range, particularly the lower wicks, reinforce the idea of this being a strong confluence of demand. This resistance zone is identified by a period of aggressive price action where sellers appeared to exert significant control, preventing further upward movement. Between the timestamps 176-299-4700 and 176-299-5600, the price reached a high of 1.16077 and a low of 1.15903. This range was characterized by a strong upward impulse followed by a sharp rejection, indicated by the long upper wick on the candle at 176-299-4700, which failed to hold its gains. The subsequent candle at 176-299-5600 opened near the previous high but was pushed back down, reinforcing the presence of strong selling pressure at these higher levels. This area represents a clear boundary where demand was exhausted, and supply stepped in, creating a ceiling for the price. The significant price swings and the inability of the price to sustain new highs suggest that this level acted as a significant obstacle. The distance from the identified support level is substantial, meeting the requirement of at least 1.5% separation. This zone, being above the 1.1596 threshold, serves as a critical resistance area due to the clear rejection and subsequent downward price movement observed within this price band, suggesting a strong presence of sellers. The bearish sentiment indicated by the candlestick patterns at this level makes it a key area to monitor for potential trend reversals or consolidations. This resistance zone is identified between the prices of approximately 1.15972 and 1.15979. It's characterized by multiple price interactions, acting as a ceiling for the upward movement of the AUDNZD. For instance, the candle ending at 3 hours and 10 minutes, timestamp 176-300-3400, had a high of 1.15982, and the subsequent candle at 3 hours and 11 minutes, timestamp 176-300-3460, also failed to break significantly above this level, with its high being 1.15999, but the closing price was lower at 1.15985. This suggests a strong selling pressure emerged around this price range. Furthermore, looking at other data points within this vicinity, we observe candles struggling to surpass this upper boundary, indicating that traders are actively placing sell orders in this area, reinforcing its significance as a resistance. The presence of multiple candles that either capped the upward momentum or reversed it signifies a clear area where supply overwhelms demand. The Bollinger Band upper limit also hovers around this area for a period, reinforcing the idea of a temporary ceiling being in place. This support zone is identified between the prices of approximately 1.15890 and 1.15901. It shows a notable cluster of price action where the AUDNZD found buying interest, preventing further significant declines. For example, the candle ending at 2 hours and 7 minutes, timestamp 176-299-9620, touched a low of 1.15921, and the subsequent candles tested this area, with lows reaching down to 1.15882 and 1.15888 around 2 hours and 4 minutes to 2 hours and 5 minutes, timestamps 176-299-9440 to 176-299-9500. The price then rebounded, indicating that buyers stepped in aggressively around this level. The Bollinger Band lower limit also hovers closely to this price range during this period, confirming it as a significant area of demand. The repeated attempts to break below this level without sustained success suggest that this price range is well defended by buyers, establishing it as a strong support. The presence of multiple candles with large lower wicks or consolidation around this level further validates its importance. Analyzing the AUDNZD 1-minute chart reveals a dynamic price action within a consolidative phase, influenced by recent volatility and the interplay of support and resistance zones. The Fibonacci levels, with a primary range from 1.15938 to 1.15979, suggest a potential upward bias as the prior price movement indicated an attempt to break higher before a retreat. The current price of 1.15949 sits near the lower end of this Fibonacci range and also close to the 1-minute support at 1.15890, indicating a potential bounce. The Bollinger Bands are relatively tight, suggesting low volatility, but the recent sharp upward movement to 1.15953, followed by a slight pullback, hints at underlying bullish pressure attempting to reassert itself. The 15-minute timeframe shows a support at 1.15323 and resistance at 1.15903, with the current price trading above the 1-minute support but below the 15-minute resistance. The initial upward projection to 1.15970 targets the upper end of the immediate Fibonacci range and flirted with the 15-minute resistance. A subsequent pullback to 1.15930 tests the immediate support and Fibonacci lower bound, a common characteristic of choppy markets. A renewed push to 1.15985 aims to break through the 15-minute resistance, fueled by potential short covering or renewed buying interest. A slight retracement to 1.15960 might occur as traders take profits before a potential final push or reversal. The ultimate target for a downward reversal would be the significant 1-minute support at 1.15900, which also aligns with the lower end of the larger Fibonacci range, where strong demand is expected to be present. This sequence of price movements, from a potential bounce-off support, through resistance, and back towards a more significant demand zone, reflects a typical market scenario where price consolidates and tests key levels before establishing a clearer direction, offering opportunities for strategic trading. The preceding strong upward move from 1.15412 to 1.15944 on the 1-minute chart, followed by the initial resistance at 1.16077, creates a battleground around the 1.15900 to 1.16000 level. The current data suggests a short-term upward bias within this battleground, with the potential for a retest of higher levels before a possible larger move.